What are your thoughts? And this is the industry that you're in. Of that, do you think regulation is necessary so consumers are protected not only with their asset but also as far as the cost? Because we all need to make money. That's we
Yeah.
can we don't live in la la land. Like insurance is a business, real estate is a business, the tacos are a business, coffee is a business. We all do something for a living, but something like insurance that I will say it's essential. um what are your thoughts of being are you do you agree with the regulations, or you think that in some way hurts the consumer because now there's no insurance companies in California? Just an idea.
There's two ways of looking at it. Obviously I'm always looking at videos and researching and doing things. There are certain uh, loud spoken people in the industry that they're thinking, obviously capitalism, right? The idea of it is you have a bunch of different companies competing for the business. And when they want to win your business, they are forced to maybe provide more coverage or lower the rate or else they're going to lose. I think that regulation to a certain point is good because it also prevents certain companies from abusing it. So I think there needs to be somewhere in the middle where, uh, even right now in the real world, I feel like these companies that have left because they didn't want to comply with certain state regulations, I think at some point they will come back once they come to an agreement. And once they come back, I feel there'll be more options, and insurance companies will again not be limited to just a few. Everyone will have to be competing again for insurance. And so the rates will adjust, I think, in a positive way for everyone. I think it should drop because there's going to be more options, but we'll see. I think it's important somewhere in the middle ground.
Great, great answer. Great answer. I would say, yeah, somewhere in the middle.
You're watching The Nuggets with Alex Lopez.
Hello, guys. This is Alex Lopez, and welcome to the Real Estate Club podcast. Today, I have the great pleasure to interview and to chat with Paul Pomes with Pomes Insurance. And as I was mentioning to you behind cameras, Paul, thank you for your time. I really appreciate,
Of course.
this time that you're gonna give us, where you're gonna kind of like guide us on how the home insurance work, especially for home buyers, first-time home buyers. So once again, thank you for your time. Welcome to the episode. Welcome to the Real Estate Club podcast with Alex Lopez. And I'm sure there's people that is familiar with insurance, and I would like you to introduce yourself, kind of give us a little bit of your background, how long you've been in the industry, why are you in the industry, and what are the most recent challenges that home insurance
Sure.
it's facing. So welcome to the podcast. Thank you for being here, and let's do this.
All right. Well, thank you for having me. My name is Paul Pomes. I come from a family of insurance agents. My parents started the agency before I was born, so I was pretty much born into it.
Mhm.
I remember, as a kid, the whole concept of the kids get the summers off and me doing a little complaining, hey, I want to get out. But instead, I was there helping filing, helping answer phone calls, getting my feet wet. And now I look back and I can't be more grateful for that opportunity that they gave me. Here we are, 37 years old. I have a family, have the agency, and we're able to help everybody and continue to help them. As far as insurance, I mean, the simple concept of it is, and it's funny because sometimes the kids at school, I have a couple of kids at school, and they have their parents come to school and explain what they do, and so
Oh,
you
like the
know,
movies, like they do in the
yeah,
movies, that the dad
exactly,
goes and talk about what dad does,
right.
mom dad. Okay.
Exactly. So, you have your doctors and your engineers and your typical professionals there. And so I explain what dad does is I'm an insurance agent. And what we do is we help protect people's homes and their businesses and their autos and things like that. this house costs, nowadays $1 million. So what do you do? Do you have $1 million to pay out if there's a huge fire? No. So what you do is you pay a small portion every year so that if something were to happen, you can come up with a small little deductible, and then we come and repair the house and save the day. So just, simple explanation, even for a kid, to understand. We try and help people protect their homes and protect their autos. Simple enough. What's happening in the industry now, that's never been seen before. This is so new
Right.
that we definitely got to get into that.
Yes, we're definitely going to do
So,
that.
uh,
So,
yeah. So I mean, you let me know.
sorry to interrupt you, and thank you for sharing this experience at your kids' school, that telling kids what do you do for a living and how the home insurance works. And actually, it's a great thing that school they have these kind of presentations, so the kids, in some way, at early age, they kind of like get some nuggets of what's going on with the world, and that's great. Home insurance is part of it. You
Yeah.
mentioned something that you grew up. You were born in the insurance business. I had
That's
the,
yeah.
I have the great pleasure of knowing your family, knowing your father. Greetings, saludos. I know you're fortunate that you're coming from your parents, hardworking people, immigrants, and I really have a lot of respect for them, for your family, for their businesses. And tell me a little bit about this. What you mentioned about that being a young age, that your parents pretty much they were bringing you to the office to help file faxes.
Yeah.
Um, Tell me, what was your thinking when that was happening? Because my parents did the same thing to me, and I
Mhm.
didn't like it much because my friends were outside playing, and
Exactly.
they were taking me to work. But in the long run, it helped me.
Mhm.
It
Of
created
course.
work ethic. Now,
Mhm.
share that. What was the effect of that decision of your parents basically come this way and
Yeah.
help?
Well, what I will say is that they were always pushing for me to do well in school and to go my own way. However, as a backup plan and just to kind of build responsibility and being able to socialize with somebody, being able to communicate with somebody, which nowadays is a little difficult for the new generation where everything is online and things like that. I was taught to look somebody in the eyes, to do a firm handshake, to be able to greet somebody, have a normal conversation. As far as the day to day on the businesses, we've seen it evolve. They started in the 80s, so I mean, what can I say? Back then, a little bit of a frustrating, but now I couldn't be more grateful for that.
How old were you when the first time you remember that? Okay, I don't want to do this. Why are you bringing me here? I want to watch TV. It's Saturday. Come on.
Uh, I mean, you know,
How old were you? Remember?
to
Just
be
like
honest, we have pictures of me in diapers running around the house. We have clients that remember me being a kid in the office and them seeing me grow up in the industry. And now,
now,
I mean,
now
obviously
you're
my
here.
family is still very much involved, but they see me almost all the time, in the day to day.
You
Now I'm
mentioned
helping their kids,
you mentioned something important that especially I'm not going to say it only in the United States, but I'm an immigrant too. I came from Ecuador in 2006, 2005, to stay here in Los Angeles. And one of the things that really struck me the most was something as simple as what you said, greeting people. That, like you said, something important, that shaking hands, looking in the eyes, good morning, good
Right.
afternoon, how are you? Proper, basic manners
Mm,
that make a huge difference in creating relationships. And
I agree.
lately, on this era that we live, it's a little difficult. I'm not talking in general. Don't get touchy about that part. But I've seen a lot of even professionals that they don't greet coworkers. I used to work in an office before I became a broker, and I remember working on the halls, and this guy doesn't say good morning. This guy doesn't look you in the eye. Basic concepts. And now I'm glad that you're mentioning this part that your parents not only took you there, to help you filing, help you faxing, help you, do something with your time, but also I'm glad that you mentioned it, like basic things that make a difference in your life. And I'm glad that you mentioned that. So don't forget to say good morning, people. Okay, so now the reason I'm asking this question because I wanted to kind of like share your background. And yes, you coming from a background of from a family that been in insurance business for decades. And I'm glad that you are providing that service to multiple families today. You mentioned that you took care of one of my past clients. It's not my past clients. I'm not going to call it past clients anymore. I'm going to call it my super fans because to this
There you
day
go.
we're still in business with them. 2008, I remember helped them buying that house. And look, it's 2024. And they texted me and they, asked me about Paul. Now, let's talk about business now, because the purpose of doing this episode, I want to give the nuggets to home buyers or first-time buyers to kind of understand a little bit about the insurance, how the insurance work, and things that they need to understand. So before they, especially when they're in the process of buying a house or when they're already in escrow, because the
Right.
insurance has changed so much the way it was back in the day, at least when I started. So the first question I have is, why we need insurance? Kind of like what you already mentioned that you explained to the kids at school. Why the insurance is needed at home?
So first and foremost, unless you're buying the house cash, there's going to be a mortgage, and the mortgage requires insurance. The way that I see it, it's kind of like, um, you need the insurance to protect yourself, so it's for your own good, but they require it. It's kind of like when you're driving, you need the seatbelt for your own good, but it's a requirement. And to the point that if you don't have it, you could get in trouble, right? You could be fined, something will happen to you. So with regards to the insurance, the way that I see it is you're going to have a mortgage. So there's somebody who still has an interest in the home. Unless you pay it off, they're not going to bug you on it. So you're required to have it from day one. That's why if it's a new purchase, even before you close escrow, you need to have a policy in place. And usually what happens is either the client will call an insurance agency, or if they don't know anybody, you have a good resource, a lender, a realtor, somebody who can recommend you somebody, and you basically give them the information of the property. They submit the quote, you guys agree on it, and then they send it over to escrow to be approved. Once it's approved, they usually request a future date that you started. Basically, we think that we're going to close escrow end of the month, so let's start the policy as of the end of the month. Usually with the homeowners package, the way that it works is no payment is required up front. We start the policy that you agreed on. We send it over to escrow, and they have 30 days to send us payment. Simple. Now, as you were saying, industry has changed. So that process of getting the quote and getting approved and everybody looking at it has gotten a little bit longer. I think you mentioned it before.
Right.
It was something that was...
Sorry to interrupt you. Yeah, that was
course.
one of the questions that I have. It's taking way longer because, like I mentioned when we were talking about doing this podcast, back in the day, right before the close of escrow, was like, oh, the insurance, we need to order an insurance. And it was just a matter of a text message, a phone call. Hey, we need insurance for this house. Boom, here
Right.
goes the proof of insurance. But nowadays, that is not the case. And we're going to talk about that. Now,
Yeah.
let's elaborate a little bit about on your answer. That was
Okay.
one of the questions that I have. So basically, you're saying you need the home. If you're buying a house with a mortgage, meaning
Mhm.
that there's a link holder on the
Yes.
property, it's required to get
Mhm.
insurance. Not different when you buying a car with financing or you're leasing a car. It's required because there is an entity, a bank, a lender that is it's basically has an interest on the property, and for
Correct.
them to
Correct.
give you the money, lend you the money, they need to be insured. Why? Because if something happens to the car of the home, the insurance is going to cover. Now, one of the questions I had is what happens if the property is free and clear, or or I'm buying a cash? Um, I think you mentioned um, no insurance required.
No insurance required. However, well, again, when it comes to home, obviously the auto, you need liability no matter if it's paid off or not to be on the road.
Right.
But when it comes to
Home.
home, um, the house is paid off. It's all on you. If you want to take that risk upon yourself, if the house burns down and it costs 500,000 to rebuild it, do you have that? Is it worth? I think it's even more important at that point. Nobody's forcing you, but it is very important. Can you imagine $1,000 deductible, even a little bit higher if you want to offset the price? But this is your copayment. This is the most you'll have to pay to repair your hundreds of thousands of dollars potentially of damage. Um, it's a no-brainer. It's just you got to find an agent you can trust. You need to find a product that you believe in, and go from there.
So basically, for a cash buyer or someone that already have a property free and clear,
Yeah,
you're insuring the property for your own protection. It's not
mhm,
required, but in case of a fire or something, natural disaster, you have the insurance that is going to protect your asset. And I
correct.
agree with you. Even more if it's paid off. Even it's like it because when you have a loan, I think when you own the property 100% free and clear, I think there's a bigger reason for you to protect your asset. So now you know, if you have mortgage, it's mandatory, it's required. If the property is free and clear, you buy any cash, you don't require insurance. However, you need to have it's you got to have insurance for your own protection, for your own benefit.
That's those nuggets that you were talking about. I will get into it later, but it isn't just to rebuild the house. A homeowner's package comes with much more than that. Comes with protection to replace your furniture and clothing. Who's going to be able to, replace all of that if there's a bad fire?
Who's
Who's
going
going
to
to?
replace my figures back there?
Oh my goodness.
I don't even want to think
Okay.
about it, man.
No, don't even think about if there is some sort of damage and you can't live in the home while it's being repaired, who's going to pay for you to live somewhere else in the meantime? You still have a mortgage, but now you got to pay rent too somewhere. So these things are things that we don't really think about. How about if somebody comes to your property, trips and falls, and decides to sue you because they broke up? Liability is included in these packages. Everybody's suing nowadays. So you want to protect yourself, not just with the asset itself, but also an asset consider your monetary value, everything that you've built up to this point. You've worked so hard, been able to save up, been able to buy this house just for not to have the right protection and somebody to take it from you or something catastrophic to wipe you out. So
I'm
I'm a
glad
true believer.
I'm glad you're mentioning these certain types of covers, because we're talking about the home insurance you need to buy for a property, right? Like you're in escrow, or my agent, my lender told me that I need home insurance. But now you're mentioning something additional, that there is insurance that can cover your furniture, your belongings, your guitar collection, your valuables. Do these type
Mhm.
of packages come with the package of the insurance that a regular home buyer is buying, or it's an additional?
So it depends on the package that you get. I would say most of the time, if you get a homeowners package, which will distinguish between homeowners and just a fire policy. But a homeowners package usually comes included with standard coverage for the building, coverage for your personal property, coverage for money to live somewhere else if you need it, and coverage for liability against a lawsuit. If you can't qualify for something like that because you're in a brush area, which we'll get into that, maybe companies will be more restricted. Certain companies will not accept based on location, and you might be forced into a basic fire policy. But we have solutions for that too. I'm
Okay.
sure,
Yeah.
there's a
Okay.
secondary we can connect, but we'll
Right.
get into that.
Okay, great. So basically, so let's talk about what is the standard package. What the standard package that the average home buyer here in California gets, or that like the minimum that you need. Like you said on the in the cars, right? Car insurance, you gotta have at least liability. What is
Mhm.
the equivalent of the liability package on a home insurance?
Okay, well, again, what the minimum requirement is and what we recommend are two different things, but liability comparison with the auto, the home, if you're going to close escrow, lenders usually require that you carry a policy that covers fire, wind, and hail. That's it. Obviously, we want to protect your belongings, all your
Say it
action
again.
figures.
Say it
So
again, please. Fire.
fire, wind, and hail.
Okay.
Those are the requirements usually for the lender. But obviously, there's water damage from a burst pipe that is not something that they require, but something that we recommend. So depending on the package, fire policy versus homeowners. A homeowner's package is what you want. It covers what they need and what you would need as a homeowner, what you want to protect.
Thank you.
Okay.
I'm going to interrupt you right there. You said fire insurance one thing, home insurance another. Can you elaborate on that?
Okay. So there is something called the California Fair Plan, which more and more people are hearing about because they're almost being forced into this. We'll get into the crisis in the state of California with a bunch of companies leaving and the companies getting stricter and things like that. But California Fair Plan is this super basic policy that you get if you need it. It's the last resort, and it only covers fire, wind, and vandalism. Fire, wind, hail, and vandalism. Okay. It's typically inexpensive, but they have been taking on everybody's rejected policies that now they have come to a point where they have recently gotten increases. But that's fire, wind, hail, vandalism, California Fair Plan, last resort.
Okay. And
Okay.
I'm glad you're mentioning this because majority of homeowners in transactions that we real estate agents do and lenders do, the California plan as always pops out. And that was one of the questions I had, but since we're talking about it, let's just
Okay.
go into it.
Yeah.
So what is the difference? Is this like a government thing? Is this like it's a government? It's not a private company or anything, right?
Well, it's something that has formed that the state is very involved in. Um, I believe it's a bunch of different companies that have come together, but basically what it is the insurance of last resort. The insurance that if you happen to have a beautiful home, but up in the hills, near the forest, near the brush, there's nothing that you can get anywhere else. So then they will accept it. Now, again, we talked about there will be supplemental packages to assist you because this is super limited. Okay. But again, fire, wind, vandalism, hail, uh, all that is being required. But again, I would stray from that. The way that an insurance professional should approach this, if you as a buyer, whether new or whether you're just shopping around and you have had your property for a while, what you should do is approach the conversation with, this is my address, these are my details of my home, what can we do? And as a professional, you're not supposed to go fair plan first. you're supposed to go homeowners package first, because it encompasses more. It protects you better. If you qualify there, you shouldn't even consider California Fair Plan.
Got it.
It's no longer an option because you've been approved
Okay.
with a preferred carrier. Yeah.
So just to give the nuggets to the people who are watching this episode, basically always aim of getting the home insurance, the package, the talk to an agent that can give you your options, give them the address, give them whatever items are needed for you to basically create a proposal, as
Mhm.
they're gonna guide you, like what are the packages at your disposal, and basically that is the starting point. You say don't start with the fair plan from the get-go, as you will only get the basics, right?
Correct. In fact, one of the rules is, have you been approved by a preferred carrier first? That's one of the questions that the California Fair Plan asks. So you
So
cannot go there first.
so you cannot
Yeah.
bypass them.
Good.
You need to go, and yes, they denied it, or it's
The
expensive,
yeah,
or this and that, and then you go
right.
there.
Yeah. An agent should recommend a better package for you. And again, if you're going to qualify, it's usually not a pricing issue. It's usually if you're in brush or something like that, that you're being unaccepted, or it's unacceptable based on that zip code or whatever the case, that then you have to go that route. Okay.
Okay, great.
And then again, one thing that we can discuss, occupancy, and we'll get into that later, because I know
Great.
you said homeowners versus fire. Okay.
Right. Okay, now let's
So
talk about
I don't know if you want to jump into that.
yeah, let's get this the beginning, like what are the requirements? I just got my offer accepted. My agent Alex told me, hey, I need you to get home insurance, or my lender told me I need to get home insurance. Or sometimes we have buyers, don't worry, Alex, I got it. I know Paul. I'm gonna call him right now. Or
Perfect.
or the ones that say, okay, I'll take care of it. What are the requirements? What do they need to present to the
Okay.
insurance agent, so the insurance agent can get a policy efficiently? What are the
Yeah.
items that are needed?
So a few bullet points for everybody to have. Um, Obviously, you need to know how you're going to hold title. So if it's going to be in your personal name, if it's going to be in some sort of entity, a trust, we need to know that. Who's going to be the owner of this property? Second, who's going to occupy it? Are you going to rent it out, or are you going to live in there? One big difference that everybody should be aware of is, if you're not on title and you're occupying the home, then it's considered non-owner occupied. It would be a rental property in a sense. So if, let's say, Alex, you buy a property and you're not going to live there, but your parents are going to live there. You have your family living there. You figure, oh, it's okay. But you have your own home. Unfortunately, if they're not on title, although they don't pay rent, it would be considered somewhat of a rental property. So we'll get into that too. Okay.
Okay.
But so things you would need: entity, or how it's going to be held under title. We need to know, obviously, the address. We need to know any updates on the property, especially if it's a little bit of an older home, which nowadays, unless you're rebuilding or moving east, typically the homes are a little bit older. So what they need to know is when the roof, the plumbing, the electrical, and the HVAC, the AC unit or the wall heaters, when these things were last redone. Okay.
Okay.
Super important to just cover all the bases. Maybe not every company requires it, but most of the preferred companies do. And since we want to start there, it'd be important to know that.
Okay. Question there. You said basically, just repeating what you just shared, basically title, meaning on whose name the policy is going to be. Are you going to occupy the property? What else? No, this was the question
Updates
I
to the
had.
building.
Yeah. this is the question I have. Do they need to provide a home inspection report? Because sometimes there are properties, let's see a probate. The seller is an administrator of the state, never live in the property. That was the
Right.
cousin's property, has no clue what's going on. Therefore, the buyer is going to have limited information about how old or how new the AC is. Do you need, as an insurance agent or as a home buyer, to have a home inspection report in order to get an insurance policy, or not?
Some companies do require that. I would, again, there's other maybe opinions, but with the approach of the insurance, I want to make sure that we can get as close to guaranteeing that you're aware of what you're getting as far as what you're buying, coverage you're getting. So what I would recommend is always get a home inspection report. If you
Okay.
don't know anybody, I'm sure you can ask one of the professionals that you're interacting with. They can recommend somebody. But by doing that, they will go deep into the property. They're going to see what exactly the bones look like,
Got it.
what you're buying, not the aesthetics, not just the exterior, but the inside. And it is important. I do have one company, it's a really good company, a preferred carrier, that will not take it if it doesn't have a property inspection.
Property
But we
inspection.
have other options.
Okay, now, well, the tip that I will give to any buyers, and I'm sure you're going to agree with me, the minute you open escrow, and that's the way I practice business, when we open escrow, the first thing we do, we order the home inspection right away. Right away, obviously, for your own protection, obviously, to meet the contingency period of the home inspection so you can, leverage your negotiations. But on this case, it's also now I'm adding another layer, which is so you can have your report to order the home insurance. So you can say, here you go, Paul. Here's the home inspection report. This is what I'm seeing. Now, most people, most realtors might be afraid of sending that home inspection report, as it's not the same to saying, oh, yeah, it has new AC, it has old water heater and this, that. That receiving a report that you have 100 things that minor
Yeah.
things that are on that property. Is that a decision factor, what you see on the home inspection, or you guys are going to see only for basic information? Okay, this has AC, this has what's it called, solar panels, this one has. So
Mhm.
I'm just going to kind of like share the facts.
Sure,
If
sure.
you provide a home inspection report to the home insurance company or the insurance agent to get insurance for a house.
I know that a lot of people think, oh, I'm sharing more information than you actually need, right? That's the idea. What do you need to know if the insulation is not up there and I got to redo that? What do you need to know if the outlet needs to be
Right.
replaced? And these are minimal things. I'm not an underwriter, so I can't say whether they, use that or not. But typically, what they're looking for is the condition of these major areas, these four areas in particular: the electrical panel, the electrical in particular, the plumbing, whether it's copper, galvanized, or PEX, or whatever's there. They want to know about the HVAC. Again, you don't have to have central air, but the wall heaters, just make sure that it's been somewhat updated. It's somewhat in good condition. So these things are super important. The roof, if the roof is falling apart and you're buying it and you think, you know what, it's the first thing I'm going to do. A lot of people right now, what they're doing is they're requesting that the seller replace it before, because sometimes it does make it a little difficult to acquire a policy if it's in a certain condition.
Certain
You
condition. Okay.
so not only does it affect the buyer, but sometimes the seller getting it off their hands. The idea of selling it as is and waiving things, I think that's reducing quite a bit
But
nowadays.
business decision and risky decision if you go that route. Now,
Right, right.
now I always try to make my conversations as authentic as possible, because it's like kind of like when you were studying for your real estate license, right? You're getting your broker's
Mhm.
license, real estate license. There's a bunch of things that on the book says this, but in reality, it's more than that, more than what we're
Mhm.
seeing here. And the same thing happens with insurance. What happens on the scenario that here you go, Paul, here's the home inspection report, da, da, da. And based on what you see in the home inspection report, we can insure this house. What are the other options besides you telling me you can insure this house because the condition of the roof, you can insure this house because the condition of the electrical, you can insure this house because of the foundation, whatever the case. But your buyer, he's like, hey, the appraiser didn't say anything. The lender has no problem. Can I still insure the house?
So there's always a solution. I'm never gonna not give you my opinion. There's always gonna be something. So what I would say in a case like that is I am not gonna be the one to stop it. I'm not gonna be the one to reject it. I can share my opinion that, who knows what they're gonna say about these particular areas, but I will always submit it. You never know. You're gonna get an underwriter that reviewed it and saw it a particular way and say, you know what, this one is not so bad. You might, you know, you might think that it's worse than it is. So I'm never going to stop that process. I will, however, have backup plans. So I'm always going to submit it with my preferred carrier. Let them be the one to reject it, not me. And
Got
then we're going to go the other options, whether we have to go California Fair Plan or whether it's very extensive to the point that no one's going to be moving in right away. You're going to be doing a major remodel inside. We have packages for that too. Something called builder's risk or course of construction, which again, nowadays, sometimes that's something you consider. You buy it with the intention of, I'm going to take 6 months to fix this thing up, and then I'm going to do it. So there are packages for that as well.
Awesome. And thank you for sharing that information, because also this information that we're putting out here is not only for home buyers, but also for agents and lenders that they know these little things that it's worth knowing because it's going to make a difference on what is the solving approach if you encounter these situations. Now, let's talk about in reality what is happening in the most recent escrows that I did representing buyers. I was shocked that the insurance almost not getting insurance on time almost killed the transaction because it was taking so long. And I've noticed that now the insurance needs to be ordered the minute you open escrow or once you get your home inspection, order insurance because it's no longer taking a day to get insurance. Why is that?
So the simple answer is that unfortunately, with recent changes in the state, companies have pulled out of the state. They don't like the regulations that's being placed upon them. And so large companies have either completely stopped insuring or they've stopped certain products. Like I know certain carriers, certain companies right now that are advertising still, on TV. They're only doing auto insurance. They're no longer writing homeowners.
Okay.
There are other companies that are feeling the impact of such a huge flow of business coming in. And you think typically, oh, they're making a ton of money. But along with all this rush of new business, it's also a lot of claims that they didn't account for. So now certain companies are raising their rates. And then others want to maintain the rates because they want to stay competitive, but they're becoming more strict on who they can insure and what they will accept. So across the board, we're an independent agency. So we have multiple companies. So usually if you can't insure with one, we can get you another. But for the most part, that's what's taking a little bit longer, when typically it was not the case.
Share a little bit of history of what's been happening for the last 5 years. As I'm sure there's people watching this also, they're already homeowners. Nora, our client, she bought the property in 2008, and she's been dealing with insurance for the last, whatever the math is on the years of owning a home. But people have this perception that the insurance rates went up due to the fires that happened, I don't know, 3-4 years ago. What was the main reason that triggered this, that at some point the companies were not insuring at all, and all of a sudden the insurance is back, but the prices like really skyrocket. And we want to know like why, because that's also one of the challenges as a realtor, that I'm seeing that the insurance is becoming sometimes even a deal breaker, because the buyer is short, because
The
they're
debt
going.
ratio changes
Yes,
sometimes when,
exactly.
as a lender, you're expecting, you estimate what the cost of insurance would be, and you can't base it on what it previously was.
Right.
So that could throw it off. It's true. Um, well, let's talk about it. I mean, yeah, there's a lot of fires and catastrophes that happened recently in the last several years. And because of that, companies have taken a big loss. And when companies take a big loss, the idea, just to kind of back up a little bit, the big picture, your policy costs $1,000, the next person costs, 1,000, whatever it is for the year, 2,000, whatever. And the point is, they put all this money into, an investment, and they try and grow it so that it can be profitable, and at the same time have enough in reserves to be able to pay off this 100,000, 200, $500,000 home when they're only collecting 1,000 from you. So obviously, throughout the years, nothing happens, everything's great, but you've put all this money into it and they've been slowly growing it. At some point, when there's blocks and blocks and acres and tons of damage being caused, obviously they have to pay all of that out. And when that reserves drop, then that's where things get a little scary, because they need to be financially strong. There are certain companies that have said, I will not insure anybody anymore because I can only handle the amount of claims for the clients that I currently have.
Wow.
I cannot take on new ones. And so it's a
So,
bigger picture like that.
so just like kind of like making it in a general perspective, like we all saw what happened, the homes that were, got on fire on years in Malibu, and
Yeah.
celebrity homes got. Miley Cyrus home, I think, was burned or something. So, and can you imagine? Now it makes a little sense. Like, it's not just one house; it was acres and
Right.
in blocks and blocks of properties. And now it makes sense, like why some companies kind of like went out of business, or at some point it's not profitable anymore when I have tons and tons of claims, and not with a $500,000 property. I
Right.
have like millions of dollars properties depending in the area. So it makes sense. And now I kind of had an idea, and I think we all have seen the news, we all have heard it, but now it makes a little more sense, because a lot of people, we sometimes we just repeat what we hear. Oh, the insurance companies are just making, they are greedy, they are trying to make this money, and they're increasing the rates and this and that. But understandable also as a business, like, hey, I can't give you $1,000 deductible, I mean, premium anymore, because we don't have the funds, right?
So that's the simplified version of it. But yeah, that's the idea. I mean, there are also regulations within the state where companies cannot profit more than a certain percentage. So it's regulated somewhat. I know that
Regulated
a lot of
regulation.
times, yeah, you look at it as just money coming out and never coming in. But if there is
Well,
claim, we've had, unfortunately, a person who did lose their home, and we're fortunate enough to be able to have paid a large sum to get that person back on their feet. In this particular case, the claim was, I don't know, 200,000 plus. And I don't believe that this person will ever pay enough to make up for it. But that's what it's for. It's not to who makes more off of who. It's you needed it and it came through for you.
okay.
That's what insurance is for.
Now, let me ask you a question. This is a general question.
Yeah.
I always trying to repeat myself on the being authentic. You mentioned something
Mhm.
important, that regulated. I remember when I started in the business, by the end of 2006, when the market crashed, and all these banks went down, the subprime loans and all that stuff. And then, the banks, the bailouts and all that stuff, FHA loans came back, and, foreclosure, short sales. But in some way, the financing got regulated. again, versus the loans that were available prior to the crash. What are your thoughts? And this is the industry that you're in. Of that, do you think regulation is necessary so consumers are protected not only with their asset but also as far as the cost? Because we all need to make money. That's we
Yeah.
can we don't live in la la land. Like insurance is a business, real estate is a business, the tacos are a business, coffee is a business. We all do something for a living, but something like insurance that I will say it's essential. um what are your thoughts of being do you agree with the regulations, or you think that in some way hurts the consumer because now there's no insurance companies in California? Just an idea.
There's two ways of looking at it. Obviously, I'm always looking at videos and researching and doing things. There are certain uh, loud spoken people in the industry that they're thinking, obviously capitalism, right? The idea of it is you have a bunch of different companies competing for the business. And when they want to win your business, they are forced to maybe provide more coverage or lower the rate, or else they're going to lose. I think that regulation to a certain point is good because it also prevents certain companies from abusing it. So I think there needs to be somewhere in the middle where, even right now in the real world, I feel like these companies that have left because they didn't want to comply with certain state regulations, I think at some point they will come back once they come to an agreement. And once they come back, I feel there'll be more options, and insurance companies will again not be limited to just a few. Everyone will have to be competing again for insurance. And so the rates will adjust, I think, in a positive way for everyone. I think it should drop because there's going to be more options, but we'll see. I think it's important somewhere in the middle ground.
Great answer. Great answer. I would say, yeah, somewhere in the middle where we all win, because this is not about just one side winning and one side, profiting. It's like we all need to win, and we're in the business of homes. You do home insurance, I do real estate, and consumers, they need a home to live. And I think it's a great way to put in it as
Mhm.
to meet in the middle. And also, it's great that you're sharing that the companies that have left the state are the ones that they don't want to really comply, I'm assuming, with these regulations. Now, I have a question regarding this to wrap this part up. Hold on.
Sure.
I don't want to lose it. I had it. Now, rates. You said rates.
Mhm.
So just to make it simple for a homeowner to understand, I have heard from my clients, my super fans, no longer past clients, and I'm super fans of them too. Um, this the whole thing with the insurance, the rates, how the consumer receive that I bought my property 5 years ago and my insurance was this amount, and now I'm getting this bill that's almost double. What was the I won't say feedback. What was the reaction for homeowners? Because a lot of homeowners, I got a lot of calls like, "Hey, this insurance is too much. What can I do?" So
Mhm.
what's a solution for them when they've been paying certain amount and now the rates are increasing? What options? What's the best approach?
Okay. Well, I mean, I think it's different, the relationship that most people have with their agent. I don't know if some people are just, um, I don't know, it's a business partner and you take my money and we'll go there. I have a different approach with my clients. I feel that, like we were talking at the beginning, I was raised up in this business, old school, shake your hand, look you in the eye. We have more of a relationship than I have heard the clients have with other agencies. When they come to my office, we learn about each other, we figure it out, and we figure out what their needs are. As far as why it goes up, I would think that a client of mine who has experienced a bit of an increase will call me and say, "Hey, what's going on? What'd you guys do to me?" And then we can figure it out. I mean, obviously, as much as certain companies are not taking on new clients, the existing policies are required to renew as long as they're, you know, meeting certain guidelines as far as it needs to be in good shape, the house can't be falling apart. If there's a claim, we just want to make sure that that area was repaired, things of that nature. But little by little, I mean, we're all in this together, as we know, so slight increases will happen, some more, some lower, but it varies. But there's always an answer again. I'm the solution guy. You come to me and we figure out what we can do, whether it means raising a deductible, figuring out if there's new discounts that you didn't have. I mean, if you
No,
have
no,
your
no,
home and auto, certain opportunities to
no,
reduce it.
no different than having your Verizon phone bill that sometimes when you call, and you know what, it works. You call and tell them, I don't want being Verizon, I'm being Verizon since I've got a phone in the United States. And they're like, okay, you know what? Let me see what I can do for you. And they start looking, okay, oh, you know what? I can offer you this, that. And it works, At the same time, you don't want to be that person that trying to squeeze. Uh,
No,
yeah,
but
but
again, I think it depends on the relationship that you establish from the beginning.
if,
I feel genuinely that if somebody is insured with me, they're comfortable. I didn't convince them. I didn't, try and lure them in. I'm very transparent with everybody. I tell you what it is. And if it's more, I'll tell you it's better where you're at. I always tell my clients and even my business partners that refer me clients, it doesn't hurt to check. And if it's better where you're at, by all means. I have told some people it's easier to renew than possibly replace and requalify. So it depends. I mean, if you don't have updates, maybe renew that policy first. Get that next year locked in before jump the gun.
your answer triggered to another question. As far as just to clarify,
Mhm.
um, so every year the policy renews, right?
Yes.
Automatically, correct?
Yeah, you get the renewal offer, and as long as it's
Oh,
paid, we're
got
good.
it. So they
Yeah.
get the offer. Now, um, because of what has happened, that companies are left the state, companies are a little more strict and this and that. Did the renewal are having these increases, or if you had a, let's see, $1,000 premium, the renewal remains with $1,000 premium. Why? Because you lacked, it's like the rate, the mortgage rate, the economy, natural disaster, you have a 6% rate, you have it for 30 years, whatever happens. So how does it work with insurance?
So with the insurance, when the renewal offer is sent out to the insured, you're locked in for that year. There's no saying what could happen at the following renewal. I'm not saying it's going to jump up drastically, but
Got it.
there are potential changes that could happen.
Got it. So
Same
it's for a
thing with
year, 1 year.
it's for, yeah, but that's what I'm saying. Before you leave your company and shop around, I either recommend pay the renewal if you're that close to it so that you have that option and you're not under the gun to get whatever somebody else has to offer if it's more or if you're unhappy with it. The other thing is I know there are a lot of people that are unhappy with certain agents. Uh, you know, I feel that you and the public can tell that I'm a different kind. I'm not here to sell you something. I'm here to provide you with a service. And if you like it, let's move forward and together we'll grow. But I'm not here to convince you and trick you and all these things, which some agents are like that. So
Look,
they're unhappy with their agent and they want to move. I say, let's shop it. Let's find you something good. And that's what we do.
look, you mentioned something important, which is like a lot of people, a lot of professionals in different industries, they concentrate just on the selling of the service, but they lack on giving the actual service because you can sell insurance, you
Customer
can sell
service,
homes,
yeah.
you can sell cars, But you might be good at selling, but are you good at providing services? Are you good on keeping in touch with your clients? Are you good at solving a situation when the problem arrives? And that's what makes the difference when you mention they are not happy with their agent. When because we're on the business, we're not on the business of selling homes or selling insurance. We're in the people business. When
Yeah,
relationships are created based on trust, and that's
I
the
agree.
foundation. Because, like you said, we had this mutual client. My client, it's been since 2008. I was doing an open house on her neighborhood on this property board closing tomorrow, and she stopped by. We hug. We say, "How are you? How you
That's
been?
beautiful. Yeah.
How many?" And they see you as no longer the real estate agent. They see you as, "This is Alex. Like, how you been?" And this,
Mhm.
and not to mention the referrals that come, but
Sure.
from that relationship. But I think it's key that we need to concentrate on servicing. On
Mhm.
giving the service more than selling the service. I think providing.
I think that both are required, but as long as you provide good service and the approach is genuine, I feel people can tell. And and I think that's what holds uh relationships together. I mean, I know we're going maybe even beyond the insurance, but
Right.
relationships in general, you need to be transparent, you need to be honest, there has to be good communication, and you figure things out no matter what, right?
And the reason why I'm pointing this out, because it's also the homeowner needs to look for those things as well.
Mhm.
It's like, it's my agent walking the talk, because he was very good on the phone. He made me feel great. And now, where's
Nowhere to be found.
exactly,
Or the servicing is done by a call center and you never
exactly.
get the same person, you never get that
And
relationship.
he disappeared. And that
Yeah.
happens. Look, that has happened to me with home warranties, with a lot of service providers
Yeah.
that they are like, "Hey, you've been on it to get my business. And when the time comes for you to perform, you're nowhere to be found." But not everybody's like that. And I know
No.
you're not like that. Okay, now let's talk about what determines the cost. Now let's talk about the different types of insurance. I'm a
Sure.
first-time home buyer. That's one. I'm buying an investment property, like you said. I'm buying a house for my parents. Two is scenario two. Three, I'm an investor and I'm gonna buy this property through my LLC. Let's talk about an for the scenario that very common. It's been very, very common that homeowners are doing ADUs, junior
Yeah.
ADUs. And I went through this experience of doing these renovations on our homes. And
Hmm.
when we got that, the insurance was canceled because the porch we were adding a square feet on the front, and we got this like it's canceled. Like, what do you mean it's canceled? That was like we didn't know. So give us the
Right.
scenarios.
So there are certain companies that accept and certain that decline based on entity. For example, if it's under an LLC versus it's in the personal name or versus it's in the name of a trust. So I'm just speaking generally. Some will accept, some will not. And obviously, if you insure it a particular way under your personal name, and there are either refinances into new companies, new LLCs, which I think an LLC is super important to kind of protect yourself. That's a whole different thing, but LLCs are really important to protect you from the rest of your personal assets. But as far as insurance goes, certain companies accept it and certain don't. Obviously, there were solutions discovered and found so that LLC, a company that accepts LLCs, was eventually acquired. But you know, when these things happen, uh, there might, like for example, if you purchase a home to live in, even if it's in your personal name, and eventually you end up renting it, you can't keep the same existing policy. A homeowner's is different. It just covers different things. As an owner occupied, you have coverage for additional living expense. You have coverage for your personal property. When it comes to a rental property, instead, you don't have personal property coverage. The tenant needs their own renter's policy. What you need as a landlord is loss of rent coverage, right? You need tenant caused vandalism coverage. So it just changes. You know, not everybody lives in the same home for the rest of their life, but fortunately, some are able to keep that home and end up renting it out. So we just need to make sure that there's open communication again, that you have
Okay.
somebody you can trust and can find a product that meets your needs. That's
Now,
all.
let me ask you this question regarding construction. Let's see, I
Yeah.
bought this property 2 years in, all good. Now I want to build my ADU.
Mhm.
What is going to happen with my insurance?
Okay.
What do I need to do?
Well, first things first, I would recommend you call your agent right off the bat. Call your agent and let them know I'm beginning this project. And if you would like, which again, I highly recommend, there's something called a course of construction policy, which basically means as you're building this home, let's say that it's halfway built, we will help you reimburse you for that amount that you have covered it for. Okay. So it's just as it's opening. I had a client that we ended up getting him a course of construction policy. He fenced off his lot, everything, all the appropriate things. And some people jumped in and took out all the copper piping and everything, and we were able to help him out with that. But, you know, again, this is a big project, different things, different needs. I would say if you're building an ADU, let your insurance agent know and they can guide you. What's the best thing? If it's one of these junior ADUs that's converting an attached garage, it's different. You may not need a separate policy. You can just be aware and maybe modify your existing policy versus if you're doing the ADU, which is converting a detached garage, you would need a
Right.
separate policy. Again, just a little nugget for you. Each structure, if it's going to be occupied by someone other than the tenant,
Need separate
other
insurance.
it needs, yeah, so each structure needs its own policy. Yeah.
Got it. Okay, so now you know if you're doing a junior ADU, I'm sorry, an ADU, which is a most of the time detached, it becomes a second home,
Dwelling. Yeah.
second dwelling. You need separate insurance. So basically, you own a house, single family, where you have the insurance. That's the policy number one. ADU is done. You need the second insurance for the ADU, right?
That's correct.
Okay.
Now, again, I want to speak generally. That's typically what you do if you're going to end up renting out the back. There are certain opportunities that if
If
you end
you're
up
not renting,
occupying it, if you're not occupying it, sometimes you can just increase the other structures limit on your primary, but it depends on the company. Certain companies allow it, certain don't. So you should just
great.
ask.
Great tip. And just to wrap this up, the ADU situation with insurance. Now, what happens if I'm doing my single family residence outside? I'm doing here the ADU, doing this, and I haven't called Paul. I haven't mentioned it, and I'm still going with construction. You are not aware of it because how are you going to know? Um, at what point? At what point the either the homeowner needs to no, my question is do you recommend that, let's say you're halfway your ADU, do you recommend to call your insurance agent to ensure, can you insure a halfway construction?
No, you
Okay.
cannot. So if you're gonna do it, tell them from the get-go. And that's why I say just have somebody you can trust. Because I feel generally, you know, if you reveal too much, people think, oh, I put my foot in my mouth and now I can't take it back. And, you know, I told my agent, now I'm in trouble. I feel like if you're upfront and you tell everybody what the plan is, we can guide you before you even begin. It's a thing that I do even with the auto insurance. Don't buy the car yet. Tell me what you're interested in. I'll tell you what the pricing is. Some people just budget for the car and they don't think what the cost of the insurance is going to be. You bought the expensive car and this is what it's going to cost. Same thing with the home. If you're going to plan on doing something, maybe throw it out there. I haven't done anything yet, but I'm thinking of doing this. what would you recommend? And then I can give you my recommendations based on attached, detached, course of construction. You think about it, all these things. Okay.
Got it. Now, let's talk about the scenario that you're giving me from your client that new construction. Let's see, I'm an investor. I bought a great property in a building from the ground up. Either I finance it through a Harmony loan
Mhm.
or I have my own funds. Um, let's see, no, let's play the scenario of the Harmony loans. Like I buy this property, I'm flipping the home. I got this loan from the Harmony lender, and my project is gonna take 90 days to rehab the house and another 90 days to sell the property, a 6 month period. What's the deal with the insurance? Do the Harmony lender or whoever is it's gave the loan to acquire that house, do they require the insurance? And what type of policy are they going to get?
I'm assuming they're going to require insurance because they want to be protected as much as any finance company, bank,
Right.
or anything. So you're going to need insurance no matter what. Again, depending on the extent of the repairs. If you're going to be remodeling just cosmetic interior, you can get, let's say, like a vacant policy. It's just going to be unoccupied. You fix the cabinetry, the tile, this and that. If you're going to be doing structural, adding square footage or digging trenches, adding a bathroom or something extensive, of course, the construction is the way to go.
Cost of
Um,
construction.
yeah, or a builder's risk. But you need to also ask your lender what it is that they need and then confirm it with the insurance because the insurance is going to be the one that says, based on what you're telling me you're going to do, this is what I think you need.
Okay.
Hopefully it matches up with it.
And this goes out to even real estate agents that invest in flip properties, and what type of insurance you should get. And I'm agree with you from the get-go. The whoever's financing is normally a Harmony lender. They're gonna request insurance, and now what type of insurance they're gonna get. Now, let's play the last scenario, which is the vacant home. I own a property. This is my single family. I found this property that I'm going to rehab and rent, but it's going to take me 6 months because I'm building a junior ADU. I'm building an ADU, and the property is going to be vacant for 6 months. Is there insurance for that?
There are certain companies that offer shorter term policies. You don't need 12 months. Sometimes it's 6 months. Sometimes it's 3 months. Uh, my recommendation is if you really think it's going to be done at 6 months, sure, you can get that. But it would be easier if it took 7 months for you to have purchased a 12-month policy and just get your money back versus having to scram to get a second policy after that policy expires. So it just depends.
So,
Up to you.
so the nugget or the tip would be, look, it's going to take you 7 months. Get the 12 month,
Yeah,
and it will, once done, notify your agent, and you might get refunded for the last 5 months. And
prorated.
you
Yeah.
get like a normal insurance or tenant occupied insurance, right? If you want
Well,
to
once you get a tenant in there, we'll replace it with a tenant occupied policy. Landlord. Yeah.
landlord. Okay, perfect. Now let's cover the scenario of homeowners insurance for owner occupied property. Um, on the packages that you were mentioning at the beginning, um, what other packages or coverages would you suggest? You mentioned potential lawsuit, your neighbor
Oh yeah.
tripped
Yeah.
on your yard. That let's talk about dogs that are aggressive and attack your neighbor. Oh, let's talk about those scenarios that you don't really think that can happen, but look, I had a situation one time that my cat went to someone else's house, and this lady, grumpy lady, I'm not gonna say the name, um, grabbed my cat. That's her story, right? I don't know what happened. but she came with my cat and she was bleeding her arm, all messed up. And she was like, "Is this your cat?" I was like, "Yeah, this is my cat." And she was like, "Yeah, he got into my house. Tried to get him out and he freaked out and attacked me." Is there insurance for that? Even though my cat went, it didn't happen in my house. It happened across the street.
So I'm sorry that that happened to you. My goodness, that's pretty intense there. I know that there have been dog bite situations that we've seen.
That was a super weird situation
Yeah.
that I was able to solve it with a steak that was buying that night. I gave it to her. Here, sorry. It sealed, and it was like the next day she came with a thank you note. So
Oh,
that
well, there you
steak,
go. That's part of being a people person.
yeah, but it was like a really risky situation if she got
Oh my goodness.
all like because she was bleeding. It wasn't like just like a little, she was bleeding. Her arm was bleeding.
Okay, well, the one thing that I would say, uh, disclaimer, of course, the when you're getting a homeowner's package, they will ask you what type of dog you have. They don't care about the cats, but the dogs, they want to make sure that it's not an aggressive breed, which I know that you know the list. Whether we agree aggressive breed or not,
Like
you know the list. It's the dog, Rottweilers,
Rottweiler, pit
these
bulls.
pit bull, yeah, all these. So again, I agree completely that it's the whole how you raise them, but they're on a list. No matter what, they're on a list with every company. So you really what's going to matter is if you're going to have one of these dogs, you have to have a company that will just exclude that dog bite, but will still insure the home. There are certain companies that will not take the homeowner's package at all. And there are certain companies that will say, okay, that dog's on the list, can't cover that one, but your pug will cover that one if that ever happens,
Look,
something like that.
it,
I know.
and it's funny that
But again,
you mentioning that they are not including cats. I tell you this, my cat, he fights coyotes. Like he's
oh
like
my goodness.
full on that you're not gonna eat me. I'm gonna, poke your eye
Oh
before
my
you eat
goodness.
me. And I have this situation with my cat, so they should change the policies and include the cats, man, because
Well, for now you're good. For now you're
yeah,
good.
okay.
But yeah, definitely liability is huge. So just consider it this way. Liability, the term itself, is just money that you have in reserves to protect you against a lawsuit. Whether it's the auto liability, that's the amount that you will pay, that we will pay on your behalf if you injure the other person or damage their car. That's what liability is. Same thing here in the home. Again, typically it's 100,000 standard if you get a homeowner's package. If you go with a fire policy, it does not come standard. But a homeowner's package and a landlord package will cover the minimum 100,000. You can raise it to 300, 500, or sometimes up to 1 million. But the more you have in reserves, the more you have to protect yourself.
Awesome.
It
Okay.
covers against, again, any kind of uh, liability lawsuit, whether it arises from a dog bite or whether it's that somebody tripped and fell in your home and there was something that you should have taken care of and possibly didn't.
Okay.
So
Now,
whatever it is, let's say the scenario that oh, go ahead.
no, go ahead. Go ahead.
Oh, the one thing that I always explain on that one for liability on the homeowners is if there's like a cement walk path that leads to your entrance, and maybe it's pavers that are a little unlevel. It's something that you may not think it's a big deal, but if somebody trips and falls on that and breaks their nose or their bones or whatever, and they want to bring up a lawsuit, that's what would that's where the liability would come into play, whether you know them or not. Yeah,
And all the packages that the average homeowner gets, the average home buyer gets, it comes with that coverage, the ones
it
that you
should come
offer.
with that. Yes, for sure.
Okay, quick question. You got me thinking. I'm seeing all these TikTok videos when all these Amazon and FedEx, DHL people they trip, the dog scared them and they had these accidents. What happens
Mhm.
if the DHL say, "Hey, I trip on your stairs, something was there, I tripped." The insurance covers a potential lawsuit by them.
So more than covers, just that's what I would say is liability protection covers you, protects you against the lawsuit. So if you're not found liable, if that was not your fault, because I'm not an attorney, so I can't
Right,
tell you
right.
whether it's somehow can be pinned on you. But if you're found at fault, they will assist. If you're being sued, they will come to your aid for protection, not necessarily paying out. But you know, there's different ways where it can protect you without necessarily saying you're at fault here. So it's just different
Got it.
different
This is more
situations. It's
a-
kind of general. Yeah,
yeah, a little question. Yeah, I just want to kind of like give that a scenario. Now,
sure.
what properties cannot be insured?
You know what? If I can add on to the previous
Sure,
liability
sure.
question, one thing that I think the viewers would benefit from this nugget, liability does not come into play when you employ somebody to come to your house. So, for example, you hire a roofer and he falls off your roof. I always recommend that you make sure they are bonded, insured, that their
Workers'
employees
comp.
have workers' comp, all these things, because it is not going to be covered. There was a transaction made, you paid them for a service. They are responsible for if they damage your home or if they get injured. So make sure you maybe
Great,
fork
great
out a little
nugget.
bit more and get a guy that's covering themselves, you
Great
know.
nugget, Paul, because there's this saying says you get what you pay, but it's not only about saving a few hundreds of dollars by hiring a handyman or hiring someone that is unlicensed and has no insurance, no bond or anything. But if something happens to that worker, electrician, plumber, handyman, whatever, they can go back to you if they were not insured, right?
Anybody can sue for any reason,
Right.
but you have to be aware of what's covered and what's not, and take those steps with care. So again, like you're saying, play it safe. Hire the person that's gonna do a good job, that's covering themselves. That, you know, again, even if it's not that they fall off, but they did a poor job repairing your roof, and then it rains and there's water damage, the insurance company would cover if wind damage blew the tiles off. But if it was a poorly done roof, you need to go back to the roofer. And that's something that people
Right.
need to be aware of.
Can you, I'm not sure if it's on your field, this question I'm going to ask. Workers' comp, what is that?
Workers' comp is when you have a business and you have employees and they get hurt on the job, no matter what type of job. So if you, again, have a construction company and you have a bunch of workers that go to people's homes and they're dealing with electrical and plumbing and roofing and all these things, you want to make sure that they're covered. If you have a trucking company and you have a bunch of drivers, you got to make sure everybody's covered if something happens on the job. Different things like that. So just consider it workers' comp, compensation for the worker if they get injured on the job, so that you as a business owner don't suffer too much having to pay out of pocket. It's coverage for your employees. And most of the time, it's a requirement in different fields and after a certain number of employees.
Awesome. It's good to know because I tell you this. I went through construction doing on our homes for the last 2, 3 years, and there was a lot of things that we learned from it. And definitely, if you're doing a project, make sure you hire a contractor that has what Paul is mentioning, workers' comp, insurance bonded, because in the long run, you know, you end up working with certain people that might be great at what they do, they might be competitive with their rates, but the liability increases, and at the end of the day, not worth it.
Yeah.
Play it safe, especially when you're putting your assets in place. So I agree. This is kind of like it's not alarming, but it's kind of like be aware. Be
Yeah.
aware the potential liability that you can put yourself and your asset by just trying to save a couple $100.
Right. I keep referring back to the point. You've worked so hard to get to where you are, to purchase this home, to make this remodel, that you have to protect yourself.
Yeah, it is. It is great. Now, lastly, to close this, what properties cannot be insured?
Properties that cannot be insured. Well, I know that it's a little difficult in certain situations when there's a home in probate. Let's say that the scenario of a family member did not have the property in a trust, and transferring the title is difficult, and this whole thing, and the existing policy was canceled. It makes it a little bit difficult. The son calling up and saying, I need to insure this house that is not in my name. That makes it really, really difficult.
I'm glad I
Um,
asked. I'm glad
yeah,
I asked that question, right?
a
Because
lot of
I do
times,
probates and
yeah,
I didn't think that a scenario.
yeah. What you really want to consider is possibly again renewing the existing policy for now, because once it cancels it, it makes it a little bit difficult. If it's in a trust and there's trustees, that's okay. But if you're trying to insure something that's not in your name, how can we pay you out on a claim? We need to pay the owner who is no longer with us.
Right.
So it's a little, it gets
Yeah.
complicated.
It's complicated, even, like that's what probate exists because,
Yeah.
um, you know, dad passed away, no will, no nothing, and you're the son. How are you going to sell it? The property,
Right.
your name,
Right.
like, or the mortgage. What can we do with the mortgage? Existing mortgage, passed away. So it is. I'm glad
Yeah.
that we mentioned this situation with the probate. So basically, the nugget, the tip is renew the policies.
Oh man, I can't stress enough to lock in the existing policy and then do some research, and that's
Awesome.
what I would say.
And Paul, I want to say thank you very much for your time. I think the goal of getting some nuggets, for consumers, for homeowners, even for people in our industry, I think we accomplished that. I really appreciate your time, sharing your knowledge, your experience, your years of doing home insurance. Thank you for sharing your background. Saludos a la familia Pomes. Like you guys are a family that a lot of people in the industry admire what you guys do, what you have accomplished. Definitely, you're like someone to follow. And before we wrap this up, there's anything that you would like to share with us or say to your clients, to the home buyers, any last nuggets, whatever you want to say.
Well, first, I want to appreciate, I appreciate you bringing me up on here. This is a great platform that you have, and I wish you much success in this. And I know that you bring such good content, and I appreciate that you consider me to be someone with valuable information to share to you and your viewers and your lifelong fans. What did you call them? Super fans.
Super
So
fans.
I appreciate that. Um, as far as and more information, again, I can't stress enough. Renew what you have. Find somebody that you can trust. And I'm a transparent guy. I like to be aware of the situation so I can guide you properly. If you feel that you can't trust the agent that you're with in telling him how you need help, and you feel like you need to hide a little bit, then you're with the wrong guy.
Right.
I would say more than price, service is super important. Obviously, price goes along with it. Um, you know, let's I say renew, get somebody trustworthy, and just be aware. Review these nuggets. It applies to everybody, new buyers, existing owners. One thing that, again, last thing, there's so much that you
Plenty
want
of
to
time.
share, but last thing that I'd like to share is, unfortunately, you can't compare the policy of the previous owner to what you're going to get now. Okay. They may qualify with a certain company, and you can't just transfer it over. You have to requalify. It's going to be a little heartbreaking to compare them to yours. Just
Right.
focus on you. you're a new buyer, whether it's a different occupancy, whether it's a different time, different company, different zip code, whatever it is, get the right agent, ask the right questions, and move forward. Like they say, pa'lante, pa'lante, moving forward constantly, trying to succeed with what we got. And I wish you and everyone a good day.
Lastly, how can people contact you?
I have an email that if you guys want to reach me,
You want to
you
put
can,
it there?
yeah, yeah.
I would put it there. Okay.
Okay, email and phone number. The email is going to be Paul Pomes Insurance at outlook.com. You can message me as well, and I'd be happy to, at least compare, see
Right.
what you got, see if I can at least confirm that what you have is a good product. And if it's pricing that we're looking for, let's compare and see what we can do for you guys.
Awesome. And
Right?
for the ones watching this episode, don't forget to like and subscribe for more nuggets, for more tips, for more content. Ask a question if you have one, and we're gonna be putting Pablo's information on the description on the link. So thank you, Paul, and for you guys, I'll see you next week.